those of the host, guests, and callers, and not necessarily those of this station, its staff, management, or sponsors.
Welcome to the Ask the Experts Show with local experts in the fields of legal, health, financial, and home improvement. Enjoy being educated in such topics as personal injury law, community association law, family law, bankruptcy law, along with health show topics like pain management, men's health, and dental implants. Now, sit back and enjoy today's Ask the Experts with host Steve-O.
No, we'll see.
Hey, good afternoon. You've got another Ask the Expert show. We have a new show starting today, and we have got a mortgage company and someone who's an expert in real estate. Let me introduce you to Steve McWilliams. I love the name of his company, Florida State Mortgage Group. Now, you didn't go to Florida State, but you know what? If you still want to give them a call, that's fine too. We're going to be talking about mortgages today, which is a topic that you have sent us so many emails on, but we've never had an opening to put a mortgage company on. Good afternoon, Steve.
Good afternoon, Steve.
Now, are you Steven or Steve?
Depends on who you listen to. Could be Stephen or Stephen, or but yeah, S-T-E-P-H. Some people call me Steve. Some people call me Steven.
We're going to call you Steve. Okay. I love that name for some reason.
I don't know. Sounds good.
So, how long have you been doing this for?
Well, I've been in the real estate business for a very long time, several decades, and we expanded into the mortgage business back shortly before the market crash back in the mid 2000s. Because what had occurred was we found, well, first of all, let me back up. I've got another company.
We're going to ask you about tell us about your company.
So I've got two companies that are sister companies, as they say. One's Florida State Realty Group, another one's Florida State Mortgage Group.
Okay.
So the real estate company we found were having various problems with getting loans approved, even prior to 2007. I'm going back many years, where deals weren't closing because of pre-approvals that came
regulations
through.
With
No, it had nothing to do with that. It was just a process. A lot of mortgage companies were taking loan applications in, and you get close to closing, and there'd be one screw up after another. Delayed closing, delayed closing, delayed closing.
Frustrating.
Yeah, very frustrating for us and very frustrating for the consumer. And if you had referred that consumer to the mortgage company, it was a bad reflection on yourself.
Wow.
Yeah. So what we opted to do was to open our own and operate our own mortgage company that ran in concert when needed with the real estate company, so that we could actually control the transaction. We knew that the deal was going to get across the finish line in close. So it gave a much greater sense of security to all of the parties involved in a real estate transaction.
So now, what areas do you cover? Do you cover Dade also? I know your offices are in Fort Lauderdale.
Okay, so in reality, we cover the entire state of Florida. From a mortgage standpoint, the real estate brokerage is predominantly the Tri-County market, Miami-Dade, Broward, and Palm Beach. But I've got connections and customers. And when I say connections, I'm referring to.
We know you're not a dealer or anything.
No. In the real estate, friends that have developed by being in the real estate brokerage business, the realtor community. I've got friends throughout the state of Florida. So we've got customers from the mortgage business throughout the state of Florida, from as far north as the Panhandle up into Jacksonville and far south down into the Keys. So we cover the east to west, north to south.
So the economy is pretty good now. But how does that reflect on the real estate market? Is it a buyer's market or a seller's market?
In my opinion, based on the market data that's been out there, the market's pretty much a level playing field and has been for a while. Any property will sell within a reasonable period of time if it's priced properly. Unfortunately, there's a lot of called blue sky pricing, where people are pricing properties far above what the market will command for them, and they just
those are the ones that are on the market for a real long time. You see the signs out in front of their house for 2 years.
Yeah, very long, and they become stigmatized because they've been on the market so long. So from a real estate brokerage perspective, when we take listings, we are very careful in doing a market analysis, in many cases obtaining
Comps and things
well,
like-
not so much comps, but obtaining a full-blown appraisal. We can use it for marketing purposes, but it confirms and validates our opinion on the values. We can share with the seller and get the property sold really into the market. It's just not our word. We're getting it validated through an official process, we'll call it, because that's what's going to happen in most cases when you have a buyer. The buyer's going to come in and bring in an appraisal, and unless the buyer's putting a whole lot of money down, they're not going to pay above appraised value unless there's one other thing. If the property has improvements to it, such as a newer roof,
Okay.
a newer kitchen, things that have been substantially upgraded in the last few years, when you compare it to the comps aren't always properly reflective of the adjustment. So somebody could sit there and say, as a buyer, I'd acquire another property cheaper, but by the time I end up putting money into it, I'm more invested in the home than I would be if I bought this home, even though I'm paying a little bit more above what the appraised value is.
I am dying to ask you something.
Sure.
So one of my favorite shows is $1 Million Listing.
Right.
In fact, actually, my morning show, I had some of the people on from Miami before the show went off the air. But you see these multi-million-dollar homes, which we do have down here.
Absolutely.
Staging. Is that really real?
Oh yeah, it's very real, very expensive.
I'm
It's very
sure.
it's very expensive.
'Cause
We've
I
done it
heard-
before, but I mean it's very expensive. So
But it must be worth it then. If it's real, it must be worth it to put out $30,000, $40,000, $50,000.
it depends. It depends. It can be. It really depends on the value of the home, the location of the home. If you've priced the home at a real aggressive market price, it will sell. It doesn't need it. Staging works really well in new homes. That's why you've got the model to get people excited, and they pick. So that is a clear cut example. I think everybody that's ever been to a new home development can understand. They go in and they see that new home, the new home smell, and the furniture, and they think it's wonderful. And then they look at their home that they're going to purchase that isn't the model, and it's empty.
Gotcha.
So it does work, though.
Do you do commercial and residential?
Yes.
Okay. So tell me, why should I hire you?
Well, were we talking as in a real estate
Either way.
brokerage capacity or the mortgage capacity?
Either way.
Well, I mean, it comes down to professionalism, and it we do this full time.
Probably service.
Service, absolutely. That's what I'm talking about. Service, knowledge in the marketplace, answering. This sounds funny, but what we find most common complaints are the listing agents not answering the phones,
Yes.
not returning calls, and the funniest is the photographs that appear in the advertised
that's
properties,
right.
where if your mother taught you to always put the toilet seat down, some of them don't apparently appreciate that. I've seen a lot of photos where the photos of bathrooms with toilet seats up, towels all over the place, a lot of pictures of furniture in property listings. So you really need to have that. You need to have the professionalism to be able to represent a property in a respectful manner, understand your legal and ethical responsibilities as a realtor, and really do what's best for both the seller and the buyer in any given transaction.
So we hear all the time about mortgage companies and rates. Let's go with mortgages first.
Sure.
There's a lot of mortgage companies down here,
Absolutely.
but I heard there used to be a lot more. So the ones that are still here in business, at least, unless they're brand new, they've been through all the wars. You've been in the business for a long time. You survived it. So how do you go about, how does someone know who to choose when it comes to a mortgage company?
Well, one of the best ways that anybody's going to find a reputable and dependable mortgage originator, mortgage company to work with, that could either be mortgage broker, mortgage lender, is through referrals. 80% of our business
Word of
comes
mouth.
from word of mouth, from either one of your friends that did a deal where they made a purchase and they got financed. And very common and most reliable is the realtor, provided you have a realtor that is doing business. Understand, in the real estate market, in the realtor community, only 50% of the realtor community do a deal a year.
Wow.
And 80%, and only 80% of that 50% do more than 2 deals a year. So it's a small number that actually are productive in their business, enough to be able to use their recommendation and rely on the mortgage company that they partner with to make sure that the deal is going to get across that closing table.
So, is it true, like with consumer credit, whenever I guess a credit's pulled for mortgages, does it decrease your credit line?
No, not at all. That's probably the single most frustrating and misunderstood fact. Or
why do people think that?
Because they read it. I mean, they read it, they hear it. It's understandable why they do it, but it doesn't apply in the mortgage industry. So what happens is, in the mortgage industry, the credit bureaus treat any credit pulls from, doesn't matter, I could pull it 10 times, 10 companies could pull it 10 times in a 30-day period, to be one pull.
Okay.
All right, because they realize the consumer is shopping properties. Now,
so if you're going to get multiple sources, it's not going to hurt your credit.
It's not going to hurt your credit. I don't recommend it. All you need is a score. It is helpful to the loan originator, the processors that you're dealing with, to have a credit report, because we need to look at your liabilities, which come over and help us determine your what we call debt-to-income ratio.
Okay.
Because that is one of, although credit scores are an issue, your debt-to-income ratio is another issue in determining whether you're going to qualify for a loan.
Okay. Give everybody your phone number, first of all.
The office phone number is 954-359-3000. My direct number is 954-449-1767. So they can call into our main number, again, 954-359-3000, or me directly, 954-449-1767.
Now, so I'm getting ready to ask you a website question. Let's give everybody your website.
Okay.
Which, you got a great website. I've seen it. Really good website.
Well, you can get to it 2 different ways. The long way is FloridaStateMortgageGroup.com, or an easy way to do it is FSMG, for Florida State Mortgage Group, the acronym, FSMG.mortgage. That will take you right to FloridaStateMortgageGroup.com.
So I see all these, I guess they're national companies, these mortgage companies.
Sure.
That have a website. I mean, it might only be something that cost them $50, because you can't really tell. How do people trust those?
It's difficult, and we find a lot of...
I'd rather have someone like yourself, local.
Correct. I mean, that's really what happens, and we find most of the problems occur from that type of lender.
People think they're going to get a better rate?
No, it's look, the rates are, in reality, you've got 4 sources for most mortgages: FHA, VA, and conforming rates are Fannie Mae, Freddie Mac. And most people are going to fit into one of those buckets, Fannie Mae, Freddie Mac being the most common. The rates are effectively set by the bond market, Fannie Mae, which is traded on Wall Street. So there really should not be a significant price variation from one lender to another lender, if all things considered equal. If facts change, and one person's working with one credit score and another person's working with another credit score, which is very common. So I'll give you an example. If you called an institutional lender, so any really large bank, you pick it, name it, they're all going to do the same thing. When they take it, they pull your credit. Your credit score comes in at, I'm going to make up the number, 699.
Okay.
And you're putting down, let's say, 5%, 3%, 5% down on a mortgage loan. The mortgage insurance and the interest rate on that loan product is going to be very high, rather than if your credit score was, say, 740 or 760. Well, what happens?
So it's based on your credit?
Two factors are the price. 2 prices are based on your credit. First is the interest rate on the loan.
Okay.
And if it's a 30-year loan, 15-year rate loan, 15-year loans don't adjust for credit scores.
Okay.
But the mortgage insurance, which can be dramatically, it's 100% more from a 690 to a 760.
Wow.
So you could
that's not much of a difference.
It's a
but
huge.
To them it is.
It's a huge difference. But what happens is when we run your credit report, we're going to analyze the report. That we get a cover page that tells us how much we can increase your credit if you do certain things, pay down certain balances.
Gotcha.
But we also have other tools available to us that allow us to analyze the credit that can even get your score higher, which actually can lower your interest rate and lower the mortgage insurance.
So you don't just go and get some loan.
No, it's not that. It's a full analyzation, and in I'd say at least 50% of the instances, we end up having to counsel the consumer to increase their credit score so that they'll obtain the lower mortgage insurance rates and the lower interest rates.
That's where your service comes in.
Absolutely. And you're not going to find that at any institutional lender.
I wouldn't think so. We're going to go to a break right now. We're here with Steve McWilliams. He's can I call you the president?
If you want to get political.
Florida State Mortgage Group. And God, I can already tell this is going to be a great show. I mean, I've got thousands of questions. We're going to go to break. When we come back, we have more with Steve McWilliams.
Big banks don't mean better deals or rates. In fact, the opposite. Current banking relationships don't mean an easier underwriting process or lower rates. In fact, stepping into the mortgage loan application process today with a big bank can be nothing but the biggest bureaucratic conveyor belt to endless frustration and constant delays. At Florida State Mortgage Group, they provide personal concierge-level service from start to finish. Florida State Mortgage Group offers the quickest application process available in today's market while providing the lowest rates available on FHA, VA, jumbos, and conventional loans. Self-employed or salaried, new purchase or refinance. Let them help improve your credit score in order to secure a lower interest rate. Call them today at 954-359-3000 and experience the difference.
Hey, we're back. This is the Ask the Expert show. My name is Stephen Sanger. I'm here with this is a new show, Steve McWilliam with Florida State Mortgage Group. And again, just a little bit about your background and your company before we get started. So we got all these new listeners now that are getting off work, getting in their car. We're talking about mortgages today.
Sure, Steve. Back in the early 2000s, we established Florida State Realty Group and found that we were having which is a real estate brokerage focused in listing and selling properties in the Tri-County market, South Florida market. We found a lot of closings were being delayed or failed to close because of bad underwriting, bad pre-approval letters by the markets, the lenders in the market. So we developed our company, Florida State Mortgage Group, that has expanded now through the state of Florida.
You were no longer at the mercy of these other companies.
Correct. We knew going
Very
in.
Smart.
We knew going in that we were going to close a deal. It wasn't. It just didn't take a deal in just to take a deal in. We knew with full confidence it was going to close.
That's the way to do it. Now, your offices are in Fort Lauderdale.
Offices are in Fort Lauderdale.
Cover all of Florida.
Correct. I mean, everything that we do today is paperless. It's an automated process in the sense of the consumers uploading their documents to us. In many cases, we can actually verify their income and assets electronically now. So there's very few document requirements that are required unless the person has a large real estate portfolio.
Is there a program out there for first-time buyers?
There are several programs out there for first-time home buyers, which is a very common question, probably at least 20% of the calls that we receive. I'll talk broad.
What makes them different?
Well, I mean, what happens is you have to fit certain criteria, first of all. So first-time home buyer, the government has realized that home ownership is good for the country.
Right.
That was clearly evident when the market melted down, because look what happened.
Yes.
So home ownership really has so many positive benefits to the community. Well, what's occurred is that there are local and state and federal funds that are used to assist people get into the marketplace, get into home ownership. So if you look at a VA loan, for example, VA loan's 100%. There's no down payment requirements. Now, that doesn't exist for all intents and purposes in the retail market, non-VA, FHA, and conventional. Well, but let me back up. Most people that we get calls from think mistakenly that FHA is for first-time homebuyers, and it's not. It's not. It's for, without getting into the weeds too much, what it's for certain customers. We're going to evaluate, make a determination whether FHA is best for you or conventional is best for you. But there are down payment programs, and then there are first-time homebuyer programs that, and some of them times they can be used. They are, in most, if not all cases, limited or focused to people that have certain income levels. So in Broward County, for example, Broward, Palm Beach, Miami-Dade County, the maximum income for a family of four, for example, I think is $96,000.
Okay.
I think it's about 80-something thousand for one or two family. Then there are other programs that are less. Family of four in Broward, maybe $64,000. Broward County, for example, has a program that we partner with that provides up to $50,000 in down payment assistance to the borrower to buy a home in Broward County. Now,
first-time homebuyer.
First-time homebuyer. First-time homebuyer, by the way, is a person that has not owned a home in the last 3 years.
Okay.
So if you bought and sold a home 4 or 5 years ago or more, you're born again as a
Who is this
first-time
person? Are
homebuyer.
they someone coming out of college, someone who's just gotten married, someone who got a better job?
We've covered the gambit from retired people all the ways down to people that you just explained. In most cases, though, it's new person to the market, starting a career, starting a family, and in a lot of cases, they're single moms or single dads with a family, and they need the help. They're making.
So if someone bought a home 2 years ago in Texas, do they have to wait for first-time home if they move, say, to Broward County?
They would not be able to own the home. They would have had to have sold. Correct. They cannot have owned a home anywhere in the United States the last 3 years. Now, we do have a program called the Florida Mortgage Credit Certificate Program. It's commonly referred to as an MCC. And an MCC is available to any first-time home buyer. Their definition is a little different. That definition is anybody that has not owned a primary residence in the last 3 years.
Okay.
But it applies to any veteran. So any U.S. veteran that has received a honorable discharge is eligible for an MCC credit. And what the MCC credit is, and these are income and purchase price restricted, but it provides them for up to a $2,000 per year income tax credit that they get from the IRS.
Okay.
So they get $2,000 back extra every year they own the home as their primary residence.
Wow.
So that's a great program that we find a lot of our customers taking advantage of. One of the other good things about the MCC program is that translates into about $167 a month in income, which can be used to help qualify the customer in the mortgage. So we used to see consumers denied a loan because they were 50, 60, they couldn't qualify, but they were just there. They just couldn't make it happen. And this MCC credit puts people in homes that they normally wouldn't be. And I can tell you personally from 5 or 6 deals last year alone, I can remember there are people today in homes that wouldn't have been absent the MCC.
Wow. So of the people who come to you, what percent can you get them into a home?
If the person is realistic, they have half decent credit and some savings to use for their down payment, we'll get them in a home.
Wow. That's wonderful. So what's with interest rates? What's happening with those now? Is that affecting the real estate market?
Well, the interest rate spiked back in November of 2016 within 2 days of the election. They started a northward trend.
Okay.
And they continued north. And only within the last, I'd tell you, probably 4 to 5 months have we started to see a pullback. The rates, contrary to belief, and people hear the prime interest rate raising, the rates are going to go up.
Yes.
That does not directly affect the mortgage rate industry.
Okay.
The mortgage rates do not run in parallel. They're not tied together. No, not at all. No. So rates have actually pulled back. I've seen rates depending on whether the person's, how much money the person's putting up, and the credit scores, various. I've seen them today as low as 4.25. I've seen them as high as 5.25, 5.5. It depends if somebody's got really tough credit. They're going to pay a higher interest rate. But the rates on average right now are probably somewhere between 4.5 to 4.75. Have been going the rates. But again, those rate fluctuations from 4.25, they don't translate into a whole lot of money out of your pocket. People get too fixated on an interest rate, then they more should be on the payment itself.
So forget about what you're hearing on a national level. I'm going to tell you something. First of all, you can see the show goes by really fast, and I'm thinking of all these questions I have for you, which we're going to have to do next month when you come back on the show. Give everybody your phone number again.
Sure. The office number is 954-359-3000. My direct number is 954-449-1767.
You gave out your direct number?
Yes, sir.
Wow, you do service people. And give them your website.
Sure. FloridaStateMortgageGroup.com, or more easily accessed by the acronym FSMG.mortgage.
And you know what? If you've got questions that you want me to ask Steve the next time he's in here, go ahead and send them to Steve-O at Ask the Experts, and we'll get those questions on. This is our first show. You're a professional at this too. We'll see you next month. We're going to go to break right now. In our next 30 minutes, we're going to have attorney Shane Farnsworth, who's a personal injury attorney, auto accident attorney, and we'll be right back.